Welcome to another exciting edition of the Trading Bell. Today on the program, we'll be speaking to Mr. Douglas Mwangi, who comes from Sidian Bank, and he's the finance director and also in charge of strategy. We'll be discussing how the bank has performed, as well as the future outlook for SME banking and trade finance in Africa. You don't want to miss that conversation, but first, let's begin with a quick look at his profile.
Mr. Douglas Mwangi is the Director of Finance and Strategy at Sidian Bank. He has over 9 years' experience in the banking sector with a sharp business acumen and possesses a wealth of experience spanning across strategy formulation and implementation, corporate planning, financial and management reporting, corporate finance and long-term funding, asset liability management and performance management. He derives his expertise from leadership roles at Sidian Bank, Bank of Africa, Kenya, at PricewaterhouseCoopers PwC. At PwC, he worked both in Kenya and in the United Kingdom, providing assurance and business advisory services to companies in various industries with a focus on the financial services industry. Mr. Mwangi holds an MBA from Warwick University, UK, and a Bachelor's of Commerce First-Class Honours degree from the University of Nairobi. He is also a Certified Public Accountant of Kenya. Mr. Mwangi chairs the Board of Trustees, KREP Group Staff Provident Fund, and also sits in the Board of Trustees, Kenya Post Office Savings Bank Staff Retirement Benefit Scheme. He joined the bank in June 2017.
Thank you, Mr. Douglas, for joining us on the show, and such a pleasure to have you on the Trading Bell.
Thank you, Abi, and thank you for hosting me.
All right.
Yeah.
Typically, you'd be dealing with numbers in the office, but at the same time, tell us the story of Sidian. Sidian is a bank that has sort of defied the odds compared to a number of banks its age. What has the trajectory of the business been like?
Okay, so maybe some history on Sidian Bank. So we are full serviced commercial bank. Previously, we were KREP Bank, and KREP Bank was more of a microfinance bank. In 2016, we rebranded to Sidian Bank to offer the full array of banking services, and that's where our current strategy changed, where we now serve both individuals and enterprises. Today, the bank is what I'd say an SME bank. Over half of our business we dedicated to SMEs, and that's how we have grown the bank, come up with innovative solutions. We've got over 43 branches around the country, so we're able to serve our customers throughout. And that's how we've grown the bank.
All right.
Yes.
And the SME business is a hard nut to crack. What has been the experience like for the bank? SMEs are typically regarded as being very high risk.
I think it depends how you look at it.
Yes.
Because if you look at the country, SMEs drive the growth of this country, at least from the private enterprise. And at Sidian Bank, we then looked at it, what is it that we can do to leverage on the SMEs? And from our experience, one of the biggest challenges SMEs face is the issue of collateral. So part of what Sidian Bank has come up with is innovative ways where even though an SME doesn't have collateral, we are able to still serve them. We've come up with the guarantees that are either from Africa Guarantee Fund or DFC, which is a United States entity that provides those guarantees, as well as Nazira, that's by the European Union. So with these guarantees, they cover at least over half. So say an SME is borrowing 200,000, you only need to provide collateral of 100,000. The other half is covered by guarantees. That we have seen has helped bring many more SMEs on board who would otherwise have been locked out. The other thing we've looked at is just our TAT and flexibility. Really get to understand these SMEs, visit them at their workplaces, what is it they do, understand their businesses, their cash cycles, and then that way we are able to package products that fit into what they do. And so far it has worked for us. So the notion that SMEs are risky, I think depends on how you approach it and how you target them.
All right. They say the proof is in the eating of the pudding. And let's get to the interesting stuff. You're a numbers guy. How has the bank performed in the last financial trading results? And what are you seeing being the next growth frontier, especially in a very tight economy where we're seeing inflation is on the rise, we're seeing petrol prices on the rise, and all this has a big effect to the clientele that you command?
Yes, yes. So we released our Q1 results 2022 recently. So did a profit of 117 million. That's a growth of about 3% from last year. And is mainly driven by our lending. We focus a lot of our growth on lending to SMEs, as well as trade finance, which are the solutions then we offer. That is what has pushed the business. What we have seen this year, businesses are just coming off the pandemic, the COVID pandemic, which had slowed down businesses. But now businesses are back and they're almost trying to catch up on the ground that they lost. The elections are down in the next 2 or 3 months. Of course, there could be a slowdown. So businesses are probably, let's do what we can so that by the time the slowdown comes, we have caught up. So Q1 was quite active, a lot of interest from our customers. We support many customers who are doing tenders, both at national government, county level, or donor-funded projects. And out of those projects are happening. We can see all the infrastructure projects happening in the country. A lot of them we are involved in supporting our customers with those.
All right. Interesting numbers, 3% jump in net profits, I believe.
Yes.
But the bigger conversation is, how did the bank perform around the loan portfolio? At the same time, how did the bank perform when you look at your non-performing loans?
Yes. So our loan book also grew by about 4%. So today our loan book is at 24 billion. Over the last 4 years when we started our strategy, we've more than doubled the size of the bank. NPL has actually worked well. As at March, our NPL is at about 11.5, 11.6%, which is below the industry average. Again, going back to the view that SMEs are not necessarily risky. They're the bulk of our customers, and we have been able, by understanding them, their cash flows and how they do, manage to keep our NPLs low, which then also has contributed to the bottom line. To support that, we've also managed to mobilize deposits. Our deposit book is now at 26 billion. Again, was compared to December, a 4% growth. We're able to mobilize deposit both through the products that we offer, as well as our branch network spread throughout. We are then able to mobilize cheap deposits. Then we've also gotten support from both DFIs and strategic partners who've given us long-term funding to continue being able to on-lend to our customers.
All right. And for any lender of your caliber, the cost of funds has a big impact on the cost of loans at the end of it. Talk to us about this. SMEs have already been experiencing challenges when it comes to accessibility of capital, and of course the other dynamics, like you said, collateral. To worsen this off, our interest rates as a country are still quite high, 14, 16% on the way up. How has the bank been able to configure and come up with a very robust model when it comes to lending to the SMEs?
So it's two-pronged. One has been just using our branch network. We're then able to mobilize the CASA deposits, given we then have customers spread out through the whole country. Then the second has been the products that we offer. So if it's a trade finance product, part of the collateral is cash, which is transactional, and that doesn't then come at a cost. Today, our cost of funds is about between 5 and 5.5%. We have been lending at about 13% up to end of Q1. Therein then we are able to have a healthy margin to cover for either the losses or any losses that we may incur, as well as get a return on our loans. From Q2 this year, in April, we did receive approval from a central bank on our risk-based pricing model, which then we have implemented. And so far, we are getting good feedback from our customers, and they are taking that up.
All right. Many argue that the risk-based pricing model might not be practical, especially in an economy of our size, where the financial institutions are still playing the pivotal role of being intermediaries. But we're also seeing a very sharp competition from digital lenders.
Yes. I think that the key issue with the risk-based pricing is to be able to differentiate customers. So if, Abi, you've got a better risk profile based on your history, and somebody else has a different risk profile, you should be able to benefit from a better rate. And that's what the risk-based pricing is. So in there, we factor the cost of doing business as well as the risk profile of the borrower. So better customers or better risk customers will enjoy better price rates. And over time, what then that does is if I've got a higher risk rating, people will then work on their credit risk rating to be able to access cheaper funding. On the digital lenders, well, I think they are in there. I think the issue with digital lenders, sometimes they're slightly different. Of course, banks are regulated by the central bank. Digital lenders are not. I think that there is a move now to bring them under regulation from the central bank.
Correct.
But also is to note, banks themselves lend through these digital platforms. So we may have non-bank financial institutions as well as banks, but in terms of numbers, banks actually have lent more on their digital platforms. So the issue with the digital lenders is bring them in under regulation, ensure they are treating their customers fairly. The country is growing. We are growing economy, projections anywhere between 4%, 5%, 6% GDP growth. So there's enough to lend out. In fact, depending on what you look at, our lending or loan book as a country is not yet where it needs to be. So even with digital lenders, I think there's still space for banks. But the issue is then everybody is on a fair platform. All customers are treated fairly, because we have had instances where some of the digital lenders, some of their lending is predatory or does not treat customers well. If that then is all managed, I think that would be a good thing for the economy.
Interesting. Yeah. I'd like to pick your mind around majority of the SME-led banks hinging their hopes on trade finance as a pillar that will define their growth trajectory. I don't know, what is the position of the bank on trade financing, and is it an area that you're seeing potential now that we're also having the Africa Free Continental Trade Area being a very hot issue across different African nations?
Yes. So trade finance follows the growth of the economy due to the infrastructure projects that are in there and other capital expenditures. So what trade finance then does is able to facilitate our customers and other players to then participate in these projects, whether we are offering bid bonds or guarantees once customers win the tenders. That then helps open up, because some of these tenders, without a bid bond, you will not be able to participate in the first place. Once you win the tender, you then get a guarantee, whether it's a performance guarantee. Sometimes there are delays in these bidders getting paid. We are then able to discount some of those invoices, avail cash flow to the customers, and that way they're able to continue trading and growing. To your question of trade finance in the region, I think East Africa and the wider Africa is on a growth path, and a lot of this then means there will be a lot of projects happening, whether led both by the private sector or government sector or donor funded, and trade finance then is an integral part of driving that process. So for us as a bank, that's where we have pitched, and we see a lot of potential in growing that space. Today our book is about 11 billion of the trade finance book. That book has potential of growing up to 25 billion in the years to come.
Interesting. And let me to still stay on matters trade finance, because it's an emerging area that, like you said, a number of banks haven't fully tapped from it. And just give me a profile of the composition of the clientele around it. Which areas are you seeing growth, and are there countries that are doing better than us, especially from a client perspective? Because you service a number of clients. Yes. Where is the money? Where is the interest?
So a lot of these customers are contractors, so doing various type of projects, whether it's a power-related projects, infrastructure, roads, bridges, stadiums. If today you look at Kenya, we are on a growth trajectory in terms of developing the country. So within the region, Kenya stands out quite high. Tanzania as well, there's a lot of projects happening in there. But also we are seeing, even from the other East Africa countries, there's quite a lot of appetite. Donor funding is also huge in this part of the world. And a lot of these donors then want to work with that type of model where the contractors or service providers are vetted, they can deliver on these projects. And what then trade finance does is it de-risks the process, because there's somebody behind who's guaranteeing that you will perform on this contract. Even though we pay you before upfront, an advance payment guarantee, there's a guarantee that you will deliver. I think then that makes it easier, and that's why we see more and more people are willing to invest in the region.
All right. And perhaps walk us through now the strategy of the bank in terms of penetrating a very cutthroat market where competition is very intensive.
Yes.
We're seeing innovation by the big boys. These are, of course, the tier one banks, where competition is on another scale, to the point where some of them are acquiring the upcoming players in the base. Do you see Sidian playing in that league around consolidation? The central bank governor is on record saying that the future of banking is a lot of consolidation. And we've already seen precedents being set by different tier one banks acquiring other would-be lenders. What do you see in your crystal ball?
Because my view would be, I think there's a space for everyone. So the large tier one banks, yes, they serve everybody across the country, wide network. The smaller banks, if you now move into tier 2 or tier 3, tend to be more niche players. So you've got a certain segment that you have identified and you want to focus on that, and that way you're able to develop competencies. So specific to Sidian Bank, our niche then is SME and trade finance. We have perfected that. Issues to do with the turnaround time, just the flexibility, how we understand our customers. You mentioned innovation. I think that's the way banking is going, and it will only get more intense. As an example, for trade finance, we came up with what we call Sidian Credible. It's a platform where the comfort of your home on a typical Sunday afternoon, you can apply for our bid bonds, either from your laptop, from your mobile phone, or any gadget, at the comfort of your house, and in 2-3 minutes you get it and it's acceptable.
Yeah.
I think it's those type of innovations which then are able to define and say, yes, Sidian then is meeting or serving a certain segment of the market. Things like cash collection. We've come up with what we call Sidian Express, just enabling our customers to be able to bank cash from wherever they are in their businesses, and that is straight away credited into their accounts. That then we are seeing is helping banks then get value immediately for any funds they do. So innovation is big. So for us, in terms of strategies, to continue innovating, looking at new products, we always engage our customers. What is it that we can do better? What is it that we were not able to do? And our key advantage is we are able to offer that personalized attention. We can come to your office or your premises of work and work with you, and that way we feel we are serving a segment of the market. So yes, the consolidations will probably continue happening in the country, and it's probably not a bad thing, but I think there's still scope for smaller, unique players who serve unique segments of the market.
All right. And as we close, I'd like to get your view on the upcoming elections. And every election cycle, we see GDP numbers drop. And this is not unique to Kenya, because across East Africa, the same applies. Perhaps what do you read between now and the upcoming elections? And also talk to us about this whole issue around banks tapping into new frontiers, especially within the continent.
Yes. I think the elections, in my view, elections will come and go. This economy is strongly led by private enterprise. And so the elections, yes, may slow down things a bit, but to the extent that the private sector is still operating and at full capacity, I don't expect there will be much slowdown. Look at it today, we are about, 2 to 3 months of the election, but business is still going on. If you look at whether it's our banking halls, other places, whether it's supermarkets, people are still working as they should. And also as a country, I think we continue developing and having better structures, better governance, better systems, which then should drive more to a more credible election, which is acceptable across the board. So elections will come and go, and after that, business will continue, and normal life resumes.
All right.
Yeah.
So that's where we want to bring it to a close. Thank you so much, Mr. Douglas Mwangi, for sharing your insights around how the bank is performing and how you are re-engineering banking in this side of the Sahara. Many thanks for your company.
Okay, thank you, Abi.
All right.
Happy to have been here.
Fantastic. Great conversations there on matters banking. And we will now want to take a quick look at how the markets are performing on this day. Well, that's how the markets have been trading this week, and it brings us to the close of our edition of the Trading Bell. Many thanks for your valued company, and always engage with us on our social media handles, and we'll be able to sample your feedback in our subsequent shows. My name is Abi Agina. Until next time, keep safe and keep it locked on KTN News, where you get the whole story.